Hey traders, Raghee here, and in this recap video I want to continue on with some of the clues that you can keep an eye out for when we're dealing with above average volatility. And just like we talked about using the currencies the other day to understand what the yen and the Swiss franc and the Australian dollar and the New Zealand dollar might be telling us about risk appetite and risk aversion, here's yet another clue into what kind of volatility we're dealing with, how to gauge it, and then what happens when we break clearing range highs and lows. So one of my favorite trades to take in the morning is a clearing range high-low break. And part of the criteria is I gauge the high and low between 9:30 and 10 a.m. Eastern, mark that, and then if that range is no more than the hourly price movement range high, I can look for a breakout breakdown. Now, if you take a look at the range here, from 64 to 62, I mean, we're pretty much at almost 22 points. It's like 21 and change, right? So I'm at almost 22 points. That is nearly 3 times the range that's allowable. Well, by the way, if the clearing range is already 3x what I'm normally willing to trade, right away by 10 o'clock, I know I'm dealing with a higher volatility day. Next is what happens, what kind of indication can I get if and when I break down through these clearing levels? And this is really, again, about what does the market's volatility one and break of certain support and resistance tell us about the risk environment, risk appetite or risk aversion. As soon as we broke this low of 26.62 right here at 10:30, heads up, because that means this market not only was willing to travel the length of a 3x clearing width, but it also had enough momentum to break the floor. And once we break the floor, you'll notice not soon after, we started to see propulsion dots. So these are all the clues that this market is, number one, the first thing is we're more volatile than normal. Number two is breaking this clearing range low. Number three is starting to plot these propulsion dots. Everything about this market by about 10:30 was telling you that, well, one, we're willing to break certain lows, and then by 11 o'clock, it's really hard to bet against the fact that the bears are in complete control. By 11:30, lunchtime doldrums, now we're actually continuing to punch down 2 lower lows, and when the market is trying to correct, it's not even able to make it to the 13 EMA, and the propulsion dots continue. So these are the kind of clues that I want you to be very aware of when you're trying to gauge the market's sentiment. And right now, we're still in the post-Monday sell-off reverberation. We're still looking at 2 and 3x price movement range volatility, which is unusual. It's not usually where we are. So I know that my risk tolerance is going to have to be higher. But how soon can I know what kind of mood the market's in? What I'm showing you here is you can know really as soon as about 10:30 in the morning, and this is what you're looking for. Now remember the video that I recorded just a day ago talking about the currency organization. Add that next layer onto your assessment, onto your analysis, and it will continue to give more and more insight into what's happening with these markets. And of course, this isn't just about being an S&P futures trader. This is also about understanding the overall risk environment and the heavily weighted stocks within the S&P as well. We can do the same thing with the NASDAQ. We can do the same thing with the Dow. It can be an effective day trading strategy, but in this case, I'm trying to assess what kind of mood the market's in. And again, that's how quickly you can assess it and make it very quantifiable. I'll see you in the next update.